I am Nicholas Lardy. I'm a senior fellow at the Peterson Institute for International Economics, which is a research organization, think tank in Washington, D.C. And for many years I've been working on the Chinese economy, various aspects of it. And my most recent work is focused on the rise of the private sector, how private firms are displacing state companies to the point at which private companies are the major source of growth of the economy, the only source of employment generation, responsible for a very large share of investment. So the success of China's economy over the last 3 decades is really attributable to the rise of the private sector. Xi Jinping is building on the legacy, and the legacy is that the private sector has been growing fairly strongly in China, particularly in the 90s, since the 90s. And he's building on that. They're opening up more sectors to competition, to entry by private firms. And most importantly, they have reduced the bureaucratic hurdles that you have to go through to start a company. So tens of thousands of new companies are being registered. The most important thing they've done, for example, is to eliminate the minimum capital requirement to start a new business. So we're seeing a huge surge of new private businesses in China over the last couple of years. At the beginning of reform in 1978, the private sector was non-existent, and today the private sector is producing at least 2/3 of output in China. So the state's still very important in a few sectors like oil and gas and finance and telecommunications, for example. But in many other areas of the economy, private firms are now dominant. Even in the steel industry, for example, which many people think of it as a kind of a quintessential state-owned company in a state-run economy, state steel companies are only producing 1/3 of steel output. Credit mostly flowed to state firms, but that has now changed. Banks are lending more money to private companies than to state companies. The biggest advantage of being a state firm is if you're in one of the protected sectors. If you're one of the 3 telecommunications companies, you have no competition beyond your 2 other state counterparts, for example, in basic wired or wireless service, because the state will not license or allow any competitors to enter. So for some state firms, it's the oligopolistic or monopolistic market structure that the state ensures that's the biggest advantage. So in other words, you're insulated from competition. I think the anti-corruption campaign, kind of feeds in to the reform process, because in some of the key industries that the state dominates, the anti-corruption campaign has gone in quite deeply. For example, in the oil and gas sector has been a highly corrupt sector where there are only 3 state companies. Some of the top leaders in those firms have now been removed or under investigation, have been detained. And I think that reduces the ability of that sector to resist reform. So we haven't seen too much yet on reform in oil and gas, but I would think over the next few quarters we're likely to see some significant reform in the oil and gas sector. So anti-corruption weakens the vested interests that are very important in some portions of the economy. I think there's still potential for reasonably rapid economic growth for another 5 or 10 years in China. There's still a lot of inefficiencies in this economy, areas where the state firms are still dominant and make very inefficient use of resources. So if they're really successful in introducing competition in these sectors, I think efficiency will improve. The return on assets, most importantly, will tend to go up. Either the state players will become more competitive or they will be displaced by private companies, so private firms would get a bigger footprint. And that has the potential to add quite a bit to the growth of productivity and the growth of output. So I'm in the optimistic camp, basically. I think China could grow at 8% or 8% plus or minus for at least another 5 years, perhaps another 10 years. I don't subscribe to this very common view that China's getting caught up in the middle income trap, as many other countries have, and they will not be able to break through into becoming a high per capita income economy. I think they will succeed in breaking into becoming a high per capita income economy. The biggest risk is that the reform process bogs down or is reversed. I think if they continue on the path of economic reform that we've seen over the last 30-some years, that they can sustain productivity growth, they can get more efficiencies, and that will generate growth. But if the reform process slows down or halts, then I think the risk is China could kind of muddle through at a very, very low rate of growth, which creates a lot of problems on the political side as well.